IFC recently came out with a report that looked into what the financing is and sort of where our outlook is right now on the continent in terms of financial direct, foreign direct investment. I'm sorry. Can you give us a little bit of brief based on the report that you and your team
Yes, and maybe I can start by introducing the IFC. We are the private arm of the World Bank Group, and a lot of our activities are focused on Africa. We are mainly active in emerging markets, and Africa is a key priority for us. So we look at global trade, that's our area of expertise, and we recently published a report analyzing the deficiencies in trade in Africa, and more generally, in foreign investment in Africa. What we found is that only 25% of trade transactions are being financed. And that's, in the more developed market, that number goes up to 60 or 80%. So there's already a major gap there. The other thing that we found is that 25% of transactions presented to financial institutions are declined. And if you look at which types of transactions are declined, you will see that it's mainly transaction related to SME, exporters, or importers. They are the least served by the banking sector. And then finally, we also found that the costs of doing trade in Africa are 2 to 4% on average, which is way above what you see in other markets, which generally below 1% in the developed world. So there's a lot for us to do, and what IFC does is we have a multiple array of trade products to support transactions in Africa. Our product flagship program is called the Global Trade Financing Program, and what we do is simply put in touch confirming banks in developed markets and issuing banks in emerging markets. And we provide guarantees so that they can establish a relationship, and we facilitate these transactions. That program has deployed $3 billion in Africa last year alone, and we focus 70% of our program is done in the lowest countries, which we call IDA and conflict-affected areas. So through these programs, we're really trying to deepen the availability of trade finance. And maybe I should have started with that, but I think you're all familiar with studies that have shown the importance of trade for the economic development of a country. There's a very strong correlation that justify spending a lot of time on growing trade. I hope that answers your question.
That was a good primer. Do you guys want to follow up with that? I mean, Theresa, I know part of what the IFC report was that banks are turning down some offers that are being out there. Has UBA had that experience at all?
Not really. I mean, UBA embraces SMEs and provides finance for trade finance for transactions into Africa and out of Africa. Just to introduce UBA, if you need that introduction, UBA is a Pan-African bank present in 20 African countries with international presence in the US, in the UK, in France, and in UAE, in Dubai. And yes, we promote finance into SMEs, especially in the area of trade.
Kevin?
Yeah. Just I think in terms of what Nathalie and what we've spoken about, I think in terms of providing access to the likes of SMEs, we at Standard Chartered, as part of our strategic vision, we have 3 stands. One of those stands is increasing participation in the financial services group sector. And what I think we're doing, particularly partnering with the likes of IFC and other banks, certainly looking at trade finance programs across the continent, pushing especially around SMEs, working a lot with the underserved, and the underserved include women and small-scale farmers. Obviously, we have sizable bricks and mortar on the ground across the continent, but we are also looking at digital investments and digitization. I think that's a big push. Part of that, I think, drives through, I guess, to the earlier panelists around agriculture and other sectors, is assisting them with payments around mobile money, for example. So partnering with our clients and partnering with the mobile companies, enabling them to make payments and receive payments in that form. But I think there is a fair amount to go. I think we're running programs across many countries in Africa with regards to financial literacy, working with governments and NGOs, and also in terms of assisting the underserved and giving them access. But I think it remains, I think, an area of, call it concern for us in terms of the aspects that Nathalie raised around certain commercial banks declining trades in Africa. Africa remains an important market for us. We are an emerging market bank across Asia, Africa, and Middle East. And another one of our stands is resetting globalization, and there's a big drive around promoting and building up trade finance and working with our customers to continue to promote trade finance.
What does that look like? I mean, building that back up and restoring that trust.
Well, I think it's a case of the various trade agreements that have been taking place. I think advising around free trade zones, providing education to our clients with regards to the product sets that we provide, making sure they totally understand. And then also, I think it's the underwriting aspect to it in terms of credit appetite. So making sure that our clients have the appropriate sizing in terms of their requirements with regards to working capital. We also assist, obviously, in terms of credit, call it their credit risk management, in terms of letters of credit with regards to certain countries. Given our broad presence and our broad relationships with financial institutions, we are often that bank that is confirming letters of credit or advising letters of credit. So we are commonly known as the banker's bank as well. So.
Sorry, I just want to come in there. One of the limitations for the SMEs would be obviously the high cost. So a lot of them are turned down because of the cost that is put to the smaller SMEs in Africa. And of course, financial literacy is key, and the ability to make the right decisions. I think that has impacted the SMEs and the trade business.
Right, and I want to talk about, Nathalie, maybe you can jump in here, because this whole week is about the U.S. sort of reestablishing its relationship and its trade relationships with Africa. But the reality is, and I think you note this in your report, China and other major players are already heavily invested in here. And so how does this resetting of relationships from your perspective in terms of financing work?
We believe there's a lot to do in Africa. There's room for everybody. The demand vastly exceeds the supply. So what we're hoping to do is encourage banks to work in Africa, to go into more risky countries, and to continue to expand. So we're very pleased when we hear that Standard Chartered has a program that is focused on gender, because we do see that among the SMEs, the ones that have the most difficulty finding financing are the SMEs led by women or owned by women. So that's absolutely an area where we want to focus on. The other thing that we try to do is that, for many years there have been many concerns about AML-CFT, and that has triggered a pullback from the confirming banks to work with the smaller banks, because the cost of the AML-CFT processes was so high that it discouraged relationship with the smaller institution. So we are providing training, IFC jointly with WTO, on trade-based money laundering. Make sure that our banks are able to provide the reassurance to the confirming banks. When I say our banks, I mean banks in emerging markets or in Africa, have the capacity to demonstrate to confirming banks that they have good AML-CFT processes. And another thing that we do also is organize workshops where we invite government institution, professional organization, but also the SMEs themselves to train them about the diversity of trade products, so that they can understand better how to work with their bankers and try to have access to more sources of financing.
Yeah.
I think we also see, I think it differs across various sectors. I think if you look at our US oil and gas client base, I think the IOCs have been tremendously responsive to Africa over many decades. I think we've been working with them for many decades on the continent. We also recognize that they have significant partnerships with many of the state-owned oil companies, and we partner with them in that regard. if you move across sectors to, for example, the agricultural sector, I think you'll find that the US, our US agricultural client base has been fairly risk off when it comes to Africa. When we look at our Asian client base in agriculture, they seem to be a lot more progressive and a lot more risk averse to the continent. So it's about, I think, sharing best practices with them and ensuring that we, because a lot of their information could potentially be perception-led, and it's breaking down certain of those perceptions, particularly around things like corporate governance or governance in general, corruption, ease of doing business, in that regard. So, that's incumbent upon us as bankers to make sure that we do that, to build that out.
And Theresa, I saw you nodding there as well.
I agree completely with Kevin.
Yeah, and I think. Oh, go ahead.
Go ahead. No.
Oh, okay. I wanted to follow up just because we were talking about risky, a lot more appetite for risk, but I think the reality is when we talk about the various countries across the continent, there is a lot of concern about debt, right, and the exposure there. I mean, does UBA, where does that factor into the conversation when talking about risk exposure?
Oh, so Africa recently, as you know, especially with the Fed obviously increasing the interest rates, foreign exchange in Africa has become, a sensitive topic. And so debts in foreign currency obviously is an issue with the banks now because of the rising cost, the cost of borrowing for the sovereign itself, of course, and of course for the businesses. So yes, so the high cost of borrowing in the dollar is definitely a factor that impacts the businesses directly, and hence the debt levels.
Well, how's it going to? Yeah.
I mean, there have been a number of liquidity challenges. I think obviously the dollar strength has been an issue. I think across West Africa we've seen some challenges. I think, but what we are doing and seeing is that we're working with, again, a number of our clients and governments looking at fairly innovative solutions around that with regards to, for example, where certain countries might be rich in a certain commodity and they would require, for example, energy or something else. There's a potential for either barter trades or something more innovative to assist with regards to the liquidity situation. I think, in general, I think, the commercial banks, we have underwriting standards, I think, which we follow through, and these are fairly well documented. But I think what we want to see is, and what we have been pushing for, is more around our relationships. These are long-term relationships. These relationships with our clients on the continent should see through, various cycles. They should see through the political cycles. They should see through the economic cycles. I think that's I guess the testament of the organization.
Well, that's a best case scenario, right?
Yes.
Right.
It doesn't always work out like that. I know, but
no. Is it working like that anywhere at this point in time?
It is. I think I think. Listen, again, the continent is blessed with some of the largest reserves of minerals and natural resources. Right. I think. One of the global trends naturally is the journey towards net zero and the journey towards energy transition. However, there just aren't enough minerals currently, I think, to meet a number of these mandates, particularly, for example, electric vehicles and battery materials. So what we have to do is, and what we will be doing with our clients, again, on the continent, is assisting, particularly around mining and making sure there's there's a here for good methodology, a partnership approach, again with governments and with our largest clients.
Nathalie, how do African countries make themselves more attractive and for more capital, more investment?
Okay, so first I'd like to highlight that when we talk about risks, we have to look at trade differently. Trade is actually pretty low risk. We have been financing trade for 18 years. We have 400 plus partner banks across the world. And over this whole period, we've done 84 billion of trade transactions in the form of financing. We haven't had any losses, right? This is quite a track record that I want to highlight to all of you, that trade in Africa is an interesting business line that is worth developing more, because you have goods going from one place to the other. It's very controllable, and therefore the risk is much lower than if you talk about long-term debt or other products that the banks can offer. So, you know, we say, you know, work with short-term finance for long-term impact. It's extremely powerful instrument with lower risk. So one of the things that we are focused on is sustainable trade. The sectors that we are trying to support more are, you know, work around food security. We're trying to support food and the agri-sector. We're also looking at climate smart investments that we try to finance as a priority. And more recently, we have tried to take advantage of the Africa Free Trade Agreement, which is being implemented, and trying to support intra-Africa trades. Because still today, a large portion of the trades are from Africa to another continent or this way around. So we're trying to support intra-Africa trade. So there's, again, you know, a lot of potential for growth, a lot of potential to attract more banks into that segment, and to see growth in that business segment.
But we're seeing a lot of the investment going to the same countries for the most part. How does that broaden out, Nathalie, from your perspective?
No, you are right. You know, we have dominant countries on the continent who drive the growth, Nigeria, Kenya, and South Africa, clearly. But our programs allow us to work in much smaller countries. And that's our role at IFC. I mean, we are not needed in South Africa most of the time. The business is running very well there. We are needed in Nigeria when there's because political uncertainty brings some more need for our interventions. But where we are really needed are in the smaller countries. It's in Burkina Faso, it's in Burundi, it's in Angola. So these are the countries that all of our programs are focused on.
And Theresa, I'd love for you to jump in as well, especially because UBA is one of the only sub-Saharan African bank in America. I mean, I wonder from your perspective, how do we broaden that out and attract more investment onto the continent?
Yes, so UBA, present in 20 African countries, invest in the the SMEs, as I said earlier. We fund them regardless of the cost of dollars to us. But to attract foreign investment, obviously we just need more structure as a nation, as a continent. We need more structure, we need more transparency. You know, we need to get rid of corruption and, you know, in different ways, but you know, to work at high levels as well, for the continent to be transparent, you know, to foreign investors who, and there are very many foreign investors in the continent, but we need sustainability and we need it scalable, and I think the continent in itself, you know, has some work to do for that.
I mean, detail that a little bit more for us, because there are a lot of things that you just noted there. And so where do you start? How would you advise governments?
I would speak about collaboration, first of all, between public and private sectors in the continent for a transparent outlook, and so that investors are confident that their investments are sustainable. And also, I think literacy, financial literacy, I mentioned earlier, would really help, you know, so that people are making the right choices within the continent as investments come in. Yeah.
Kevin?
Yeah, I think we heard the Honourable Minister speak about partnerships earlier. I think, you know, we work very closely with the IFC, as I mentioned. I think we are continuing to build out the, you know, I think our accessibility with regards to the sizable funds that we bank. So working more closely with the private equity funds, a lot of the strategic investor groups, working with a number of the NGOs and some of the donor organizations. And then I think finally the piece that we haven't spoken about is around ECAs, export credit agencies, which we work a lot with. on the continent, especially in sizable infrastructure financings, which provides, again, guarantees and support for us as we either lead and finance these mega projects. So it's a partnership, and I think we have to do more of these.
Nathalie, do you agree with that?
Yeah, we are working hand in hand. Our focus is on developing the internal capacity of the banks in Africa. So we want them to grow. We want them to offer more products locally to the SMEs, because it's easier for them to know their markets and know with which clients to work with. So we strengthen their capacity as much as we can by providing training and support, because we believe that a lot of the activities in Africa will be financed through these networks of banks. UBA has 20 subsidiaries. There are other groups that are also well implemented in Africa. And so we think that if they can offer today letter of credit, but tomorrow maybe we can introduce more supply chain finance, which is one of our goals now, is to look at supply chain financing for suppliers in Africa. It's not a product that is well developed in Africa, and that's the kind of thing that we would like to see grow, so that the continent can benefit and grow within Africa with the strength of the financial institutions in Africa.
When do we start seeing that having an actual impact then?
Well, we feel that we can see the impact. I mean, we see already basic trades is growing. So you can say that some of it is related to the crisis that we've gone through. But the numbers and the demand is growing very rapidly. There's clearly an impact. And then at the same time that we need to continue supporting these activities, we also need to develop new products. One of the conclusions of the report is that we need to innovate also in the financial sector to serve better the SMEs, which are a motor of growth for the continent.
Right. And we're seeing that a little bit. Theresa, did you want to add anything?
No, I agree with Nathalie.
Yeah, we are seeing that a lot, but the SMEs are going to need. Is UBA doing anything specific just to, I mean, you mentioned financial literacy, but are there other innovative tools that UBA is trying to tap into?
Oh yes, of course, we work with the development organizations to get funding for the African businesses, for different sectors and different programs, so UBA taps into that, being in the US, and perpetuates it into Africa, into our presence countries.
Right, and taking a different approach, though.
Absolutely.
I'm assuming.
Yes.
Great. And just finally, I'd love for everyone to leave with something. Kevin, would you be able to share something for us, just in terms of we're on the sidelines of the summit and it's all
I think I think we've always heard about Africa's time is now, but I think Africa's time is really now. I think I think the having worked through the pandemic, as tragic as it was, I think it was an opportunity to reset things, especially reset supply chains, reset partnerships, and I think there remains and will continue to be tremendous opportunities. We have to change perceptions. I think we, especially working with our US client base, as you've said, I think somewhat left behind in terms of investment on the continent, and will certainly, I think, start looking and pushing on those investments going forward.
Nathalie?
Yeah, we're also very optimistic for Africa. We just launched an Africa Trade Recovery Initiative focused on recovering after the crisis for $1 billion US, and covering all the topics that we discussed today. Yeah. So we're looking forward to doing more in Africa, and very confident. There was a summit in Lomé recently, the African Financial Institution Summit, and it was really well attended, and there was a lot of positive energy and lots of things happening on the continent that makes us very positive about the outlook.
Theresa, you get the final word.
Yeah, I think from UBA's perspective, it's access to finance, for SMEs, financial literacy, making the process less complicated, the loan process is less complicated, and of course, being a conduit of investment to the different countries where we're present, to Africa, sub-Saharan Africa, basically.
Wonderful. Well, thank you so much. Thank you, everyone, for your time. Theresa, Nathalie, and Kevin, thank you. And that is where we wrap it up.
Thank you.
Thanks for listening.